All right, lots lined up today on the market. But in the meantime, let's take stock then of some of the stocks on the editor's radar this Monday morning. Two stocks that we're flagging off today. It's Canfin Homes as well as Godrej Consumer. Let's begin then with Canfin Homes. It's in the spotlight as there has been a change of guard. In fact, the latest news indicates that Suresh Iyer has been appointed now as the new CEO of the company. Ex-Bandhan Bank, what does this mean for Canfin?
Avan, I've always said that the change of guard, at least in a financial institution, could really change the fortunes because it's the CEO which, in a sense, the financial sector business is a very easy business. You take money from depositors and you give it to the borrowers. Then why is that every bank is different? That's largely because of risk management, ability to understand the customer, and your ability to really expand the balance sheet. Can Mr. Iyer really be the change agent for Canfin? Historically, we've seen the change of the guard, at least in some of the HFCs, they've done rather well. Canfin is a great brand. Their access to capital, I think, is fantastic. Valuations are not looking that stretched. And this is one company where return on equity, where return on capital should be in double digit, where the growth should be in double digit. It is not a very expensive stock. So can there be a mood change? It's not going to be change in numbers immediately, but can there be a mood change? Because historically we've seen that when a private sector CEO comes to a PSU bank, whether it was Bank of Baroda earlier, whether it was PNB Housing earlier, could it be Canfin Housing now?
Okay, so change of guard, and that should usher in a better change in sentiment when it comes to Canfin Homes. Let's move right on then, and it's an FMCG stock that's in the spotlight, Godrej Consumer. Goldman Sachs has come out with their latest report. They're pretty optimistic. They maintain a buy rating with an 1100 rupee target price, saying that the turnaround may gather momentum, and even when it comes to segmental growth, they continue to remain positive, saying that it's actually one of the top picks within this space.
Look, they've taken a lot of decisions and a lot of painful decisions. So Godrej Consumer, to be frank and to be honest, they've gone through a patch of lean growth and patch of lot of reorientation in their product portfolio. Now the report in my hand from Goldman Sachs, they are making a case that guys, they're coming back and they're getting the mojo back. They're coming up with the new products. Insecticide, we don't talk about it. It's a big business for them. Liquid vapor, they're trying to in a sense challenge Vicks with a small ticket size. They're looking at coming up with a small size aerosol spray which lowers the price entry point from 115 rupees to 50 rupees. Again, this is eco-friendly. That's what they're claiming. Right. So Goldman Sachs is of the view that product launches, painful consolidation, change of guard, and relatively moderate valuations are the facts which in a sense could have impact on the Godrej consumer stock in the near term. I also feel that we are going through that phase of the market where commodity prices have peaked out. Defensives have started moving higher. We don't talk about it, but this is one of those stocks which in last 52 weeks, despite change of guard and despite concerns in terms of pain, has given a 30% return.
Okay, that's Godrej Consumer as well as Canfin Homes. Anisha, let's also find out what other stocks are on our guest radar today.
Oh, well, yes, absolutely. But before we do that, let me go across to Naresh to try and understand what his view is on Canfin Homes, because that stock has been consolidating for a while because of this entire uncertainty regarding the leadership change. Now with that coming in, would you want to bet on Canfin Homes and any other NBFC name that catches your fancy, Naresh?
So, Canfin Homes in the past has been one of the better performing ones in the housing finance space, but off late it's not been the same. It's gone sideways for a very long period of time. So, say from the time of pre-COVID, the stock used to be 550. In between, it went to 700. We are still at 530, 550 levels. And there have been erratic moves. So, we've seen in the last 1 year, there have been some very big swings. So, it was at 700, then went to 420, then back to 690. And then we went back to almost 460 levels. So, technically, it's very tough to take a call here till the time we don't see a clear trend. And say going forward, once we start crossing 570, that would be the first indication, whereas we say the trend has changed for good in the near term. The only thing is now the base has started moving higher over the last 6 months. So 480 to 500 remains a very important support, but the trend is very difficult to make out here.